Hello traders, you're welcome to my video on the twin range filter indicator. All right, the twin range filter indicator is actually an effective indicator that tries to help you cut through the noise and improve your trade accuracy basically. So without wasting much time, let us just start with the basics. Okay, what is the twin range filter indicator? I'm going to add it to the chart right away. All right, so this is the twin range filter indicator. It is designed to eliminate market noise and just give you precise entry and exit points. Okay, just to cut the long story short, this indicator is designed to cut through the market noise and just give you precise entry and exit points. As you can see, there are no lines, there are no histogram bars, there are no no dots, no arrows, and all of that. All you just have is short signals, long signals. Okay, so the twin range filter tries to calculate the difference between short-term and long-term price movements, filtering out erratic price spikes and consolidations, helping traders to avoid getting trapped by false breakouts and misleading price movements. But it doesn't mean that the indicator guarantees profit. Okay, there is no indicator out there that guarantees profit. It might be effective, but just consider it an addition to your trading toolkit. Okay, now let's just briefly look at how the indicator has been giving signals over a specific period of time. All right, so like I said, this is just a very straightforward indicator. When it identifies a potential sell opportunity, it gives a short signal. All right, so what you have to do is just, in my opinion, combine price action with the signals. Okay, when you have a short signal, a signal to sell, the short signal is for selling, the long signal is for buying. So when you have a short signal, make sure that there is confirmation from candlesticks or chart patterns. Now, if you look closely, when we had the short signal, it seemed as if price was already forming lower highs. Can you see? The signal came when price was already forming kind of a bearish structure. That was when the signal came. So this was acceptable because the sell signal came when a sell structure was forming. So in that case, you could have considered entering your sell, setting your stop loss above the previous swing high. Then you can just target support levels. You can just use the nearest support level. For example, here, you can see there is a support level around here. So you can just target using support levels for your take profit. All right. Or you can wait for the indicator to give you a long signal. So when the indicator gives you a long signal, you will now exit your sell trade. So that is another way to exit your sell when the indicator gives you a long signal. Let's look for an example of a buy. All right, so remember I said always combine it with price action. Please look at your key levels on your chart, support and resistance levels. Now you will see that this long signal came when price was being rejected around the support. So this was like a very, very good opportunity to buy because the signal came around a support. Now you would have considered entering. Okay, let's just say you waited for this candle to close, and this candle closed, the next candle closed, and guess what? This candle was a bullish candle. Can you see how this candle was quite long? It was a significant candle that shows that bullish momentum was prevailing. So you would have considered entering your buy, setting your stop loss below the previous swing low, and then your take profit can be at resistance levels. Okay, for example, you can use nearest resistance levels, or you can just wait for a short signal to appear. So when a short signal appears, that could be a sign to exit your buy trade. So in that case, if you had entered a buy around here, you could have considered exiting your buy trade around here when the short signal appeared. Okay, now this was another long signal that appeared here. That was for a trend continuation, because you will see that this was a buy trend that already began. All right, that's why I say please always use price action. Plot your trend line, set your horizontal support and resistance levels, so that when you get a signal, you're going to verify that signal using price action. Okay, so you will see that we got a buy signal around that zone, and the buy signal was valid because it was a trend continuation signal. And as price got rejected around this trend line support, you see that price got rejected around the trend line support, and we had a notable ascent. So if you had entered a buy trade, let's say around here, you would have considered setting your stop loss below that swing low, and then your take profit can be at resistance levels or when a short signal appears. So when a short signal appears, that's your cue to exit your buy trade. Now, this is another example. You can see now we have looked at a few examples, right? This is another example where a sell signal was given, and then you can see that confirming with price action, we had a break of structure because price broke out from this bullish trend, and you can see that price started forming lower highs and lower lows, right? So basically, the structure was broken at first. The bullish structure was broken, and then a short signal was given. So when that short signal was given, because it's aligned with the newly formed bearish structure, or rather the bearish structure that was just building, because it aligned with it, you can consider entering a sell, setting your stop loss above the previous swing high, and then you can target support levels for your take profit, or just wait for the long signal to be given and you exit your sell. And then here, this was a buy signal, and it keeps on going. You can see there was a buy trend after the buy signal, and here this was a sell, it was a buy, it was a sell. So you can see that this indicator is quite effective, right? And it's very straightforward. Okay, it's an indicator that can be used by complete beginners. This indicator just gives you precise entry and exit points without you necessarily needing to stress yourself doing a lot of analysis. But I recommend combining it with price action, okay, to confirm the signals given to you by the indicator. Okay, now let's just talk about settings. Okay, just very briefly, you will notice that this indicator does not exactly have a lot of settings, right? The default settings is absolutely fine, but if you want faster signals, you know that settings can always be modified, right? But if you want faster signals, you can consider reducing the range. All right, you can consider reducing. If you want faster signals, you can consider reducing the values, right? You can reduce the values, perhaps of the fast period, maybe even the fast range and slow period. But if you want, a more longer term approach, you want the signals to come at a gradual pace that is considering the longer term trend and all of that, you can consider increasing the values. But basically, in my opinion, the default settings are fine. But if you are a fan of modifying settings according to your taste, then that's absolutely fine, so long as you know what you're doing, right? Yes, so long as you know what you're doing. Okay, so now you can also combine this indicator with other indicators in addition to price action. Yeah, you can also combine it with other indicators. For example, you can decide to combine it with the RSI, for example. Okay, so in that case, you can be using the RSI to confirm overbought and oversold conditions. Maybe when you get a sell signal, you just watch out for the RSI to confirm if the RSI has entered overbought. In that case, if you have RSI in overbought and coming downwards, that even adds more validity to the sell signal. Okay, so if you get a buy signal when the RSI has entered oversold and coming up, that adds more validity to that buy signal. All right, then another indicator you can combine with the twin range filter is moving averages. Okay, you can actually use moving averages to confirm sorry, I meant moving average, not MACD. You can use it to confirm trend direction, right? You know that the moving averages are one of the the most common trend following indicators, right? So you can decide to edit the period for the moving average according to your trading style. Yeah, once you have done that, then you can just use that to confirm confirm the trend direction. Okay, it's great for confirming the trend direction. For example, you have a buy signal from the twin range filter, and then you see price climb above the moving average. That confirms the trend, right? Or you get a sell signal and you see price drop below the moving average. That confirms the sell. All right. Another indicator that you can actually combine, this twin range filter with is, volume indicator. You can actually use any volume indicator of your choice, right? Okay. So let's just consider using the volume, let us use the volume oscillator, for example, right? So basically, if you have a buy signal and you notice a spike in volume, right? If you notice an increase in volume around, okay, this volume oscillator is not exactly the kind of indicator that I was having in mind. Okay, I'm looking for something that aligns with, let's see. I was looking for volume S. I thought volume S was somewhere around here, right? But I can't seem to find it right now. Okay, let's try this out. Yeah, because we want to be looking for increase in volume. Okay, yes. So when you have a buy trade, for example, yeah, and you see it must not be a spike, but if there is a gradual increase in volume, it just adds validity to that signal because it shows that momentum is building. Like in this example, we had a buy signal, and you can see that there was a gradual increase in the histogram bars for the buy move. That shows that this trend was valid. If you were in the trend, you could have remained in that trend until maybe the volume now reduced, because this shows that the buy momentum was still increasing. So you could have remained in your buy trade. Okay, then for the sell, you can see that we are having declining histogram bars. That shows that the sell was not going to last for long. You can see it didn't last for long, right? But at this point, okay, let's use this as an example. Yeah, no, not that. I'm looking for. Let's go to a trending market first. Yeah, let's go to a trending market. Let's look for something that is more. So this is for those who like using volume analysis, right? Basically, not all traders necessarily need to add the volume indicator to their chart, but I'm just adding this indicator for those who like volume analysis, right? You can actually use any volume indicator of your choice. The essence is just confirm that volume is supporting the move. Just confirm that volume is supporting the move. For example, in this case, there was a spike. Like I said, it may not necessarily always be a spike, but so long as the volume of is so long as sell volume is increasing when there is a sell trend, yeah, that's a confirmation. Or maybe buy volume is increasing when there is a buy trend, that's a confirmation. Or maybe you have a spike and sell volume when a sell signal is given, that is also a confirmation. Or maybe you have a spike in buy volume when there is a buy signal, that is also a confirmation. Okay, so basically that is it, right? That is it for this indicator. Super easy to use. All right, it's super easy to use. Whether you trade forex or you trade stocks or you trade crypto, this indicator can be a valuable addition to your trading toolkit. Okay, so if you found this breakdown helpful, don't forget to smash that like button and subscribe for more in-depth trading strategies. Drop a comment below and let me know if you've used the twin range filter before or if you have any questions. Okay, turn on notifications so you never miss an upload. Until next time, trade smart and stay disciplined. Happy trading. I look forward to seeing you in the next video.